Well, joining us now to discuss investor confidence and the impact of the $700 billion-plus stimulus plan on the U.S. economy is David Resler, chief economist at Nomura Securities. And David, great to see you again.
Good to be here, Betty.
Are you surprised at all? I mean, the fact that the confidence numbers that we have gotten have taken a step back.
No, not really, especially after what we've been through in the last couple of months in the stock market. It's kind of like having a baseball team that just wins 20 straight games. Do you expect them to win the next 20 as well? I don't think so. I think that after having this kind of run in the market, it's natural that optimism about that continuing at that kind of pace will wane. We are, as your comment suggested, we are at the point where we now have to see some absolute demonstration of expectations being fulfilled before we can take the next step forward. And I think we're at that point where we're waiting for that fulfillment.
And what would those be, David?
Well, I think, first of all, we've got to see some evidence that the expected improvement in the second half of the year is continuing to shape up. As we see things, the economy so far this year has progressed about as expected. The economy was in miserable shape at the turn of the year. We expected that misery to diminish as we moved into got to the spring and moved into the summer, and it is indeed doing that. Just today we had a very encouraging report from the New York Fed index showing essentially a zero index. Now, that's not great news, but it's a lot better than the deeply negative numbers that we had a few months ago.
Now, does all of this, though, tell you that the recovery here is going to be a whole lot messier than we may have originally forecast?
I don't see anything that says it's going to be a weaker recovery than we expected. We have thought all along that this was going to be a very gradual and long slug out of the deep mire that we got ourselves into. It's not going to be an economy that feels particularly good, but it's also going to be one that's not as bad as we were in a few months ago. If we go from negative to positive numbers, that's an improvement of considerable importance. It's still a long way, though, from being where we were a few years back, and it's going to be a long time before we get back to those levels of economic activity.
David, how much of any type of recovery, or at least a less bad scenario, how much do you attribute that at all to the stimulus plan?
Well, the stimulus plan has put some money in consumers' pockets. We had in May, for instance, a one-time payment of $250 to some 50 million retirees. That provided a one-time pop to consumer income. Not much of it got spent in May. Some of it will get spent gradually. The more important part of the stimulus plan that's going to have an ongoing effect through the rest of this year is the Make Work Pay tax credit, which began coming into people's paychecks in April, and now we're kind of at a steady as she goes rate of increase. We'll get another benefit from that early next year when those people whose paychecks can't be boosted because they don't make enough to pay taxes will be able to claim those credits.
But what about creating jobs or saving jobs through this package?
Well, there was very little in the plan that was going to directly save or create jobs. It was going to do so indirectly by stimulating aggregate demand. And we're stimulating it in a relatively small way through these tax cuts. Some of the longer-term spending programs that were much ballyhooed when they were enacted were not expected to take much effect this year anyway. The structural spending for infrastructure investment really doesn't take effect very much until 2010 or even beyond. And the Congressional Budget Office made that point even before it was passed.
Yeah, they made that clear, but we have gotten comments in just even the last few days from Tim Geithner, for instance, saying that we will feel a considerable impact from this package in the second half of 2009. Any reason to doubt that?
Well, I think we can debate what he means by considerable. We're getting some impact from it already, and that's factored into most people's forecasts. I think the grants and aid to state and local governments have also helped them preserve their budgets without tax increases or deeper cuts than they'd otherwise have to do. That's probably been a benefit as well. So there will be some developing benefit from this stimulus plan as we move through the this year. There will be a payback for it down the road, though, when we have to raise taxes to pay for the debt that we're incurring to have this program.
David, just finally, are we looking at a jobless recovery here or no?
Well, we had kind of a jobless recovery in the last two, in 1992 and in 1991, 92, and then again in 2001, 2002. I think that it's going to be a period that's going to take a while for jobs to start coming back. We think that we're going to start seeing increases in non-farm payrolls by the end of this year. There won't be particularly large increases, I suspect, but there will be increases.
Okay, David, thank you so much for joining me on the economy. David Resler, Chief Economist at Nomura Securities. Good to see you again.